Welcome, everyone. Welcome back, really. It's been an interesting summer, I think, for all of us. We've had smoke and crazy fires, and now today a little bit of rain, which is fantastic. So today we've got Lisa Alentejano. I hope I said that right.
Well done. Pretty good.
Is it?
Pretty
How do you say it?
Alentejano.
Okay.
Most people just stutter a little bit just because they're afraid to say it, but it's all good.
Right.
I've heard it all.
I was a little reluctant there. Okay. So welcome, Lisa. So Lisa's with Equitable Bank. We've all known from the past that Tim Wachter was our contact, and Lisa just informed me that I think Tim is actually retiring. So I'm going to turn it over to you, Lisa. I'll let you share your screen and just a little intro, and then tell us about Equitable.
Okay, so you can see my screen, right?
Yes.
Okay, good. You said share your screen, so I'm like, I hope you can see it. Hi, everybody. I think most of us we've met at some point in the past. I've been around long enough. I've lived in the Okanagan for about, well, in this part, 7 years, Kamloops for about 6, and then I'm born and raised in Vancouver. But I've been in the industry probably 30 years. So 9 years as a broker, and then the rest of the time spent with other lenders, mostly monoline lenders. And now with Equitable, I've been here for about 4 months now. So I'm going to take you through our alternative mortgage solutions. I do also want to mention and just remind you that we do also deal with the prime side, which is simply your A deals that are insured and insurable, and also highlighting that even on a 65% loan to value or less, we're not charging an insurance premium unless it's the stated income program on a 65% or less. So we deal with all three insurers on the prime side. I'll also just sort of throw in some things that probably aren't in the webinar, but keep in mind when you're submitting to us, there is 4 drop-down menus, and I'll touch base on all of those. Equitable Bank Evolution is our prime side. So you'll see that. So if you have an A deal, insured, insurable deal, that goes to the Evolution, that's our A side. And then Equitable Bank is our alternative solution side. There is a product that we have soft launched in Vancouver because it's only available in Vancouver. I'm not going to go through it today. It's called Equitable Advance. It's sort of a non-B20 product. I can touch on it, and I will maybe at the end, but as I said, it's in the Vancouver market only in Ontario right now, sort of like I guess a soft launch, so to speak. And then, so that one has a separate submission. And then there's also our reverse mortgages, of course. And if any of you, I'm not going to touch base on that either today, that's a separate webinar, but if any of you have any interest in learning more about that, we are very competitive with our reverse mortgages, quite often better priced, and we pay really well. So keep us in mind for those things, but I'm going to jump into our advanced learning product, our lending product. If you guys have any questions at all, I don't mind you saying, hey, Lisa, or whatever. You can put it in the chat box, or you can certainly just unmute yourself if you like.
Lisa,
so, yeah.
I just noticed velocity. You guys are good with velocity? Because I just looked in there and it looks like there's all 4 in there, and Philogix too.
Yes, all of them. We accept all of them. You're correct. Thanks for saying that. Okay, I'm going to jump in to our alternate lending solution. So I'm going to talk about some of our niche products. We're going to go through some of the value-added programs. I'll go through some specific scenarios about what kind of deals may fit these programs. Of course, with the alternative lending space, there's lots of flex on different criteria that we do. They may not touch on them today, but if you have specific deal scenarios, please always reach out to me for those. Talking about service, so just from my experience from being here and being in the industry for so long, the one thing that we do really well is communicate. So that starts with myself responding to your emails, responding to your calls, and that flows right to the very end to funding. So what you'll experience here is when you submit your deal, the system will automatically acknowledge your deal by saying we've received it, and it's now going to be allocated to an underwriter. At this point, you guys don't have a dedicated underwriter, but we're working towards getting that in the new year. So that's what we're hoping for. But I think even with, say, having said that, you're still going to find our service very good. Typically, we're within a 48-hour response time. So once you get that notification from the system, the next step will be the notification from your underwriter. So if you're submitting a purchase to us, they will reach out and say, could you please send me the purchase agreement and the MLS for the property details. From there, once the deal is approved, the underwriter will communicate that. Here's your approval. If an appraisal is required, they'll send they'll attach the approved appraiser list. Just a note on that, we do not use NAS or Solidify. So you can order direct. And most of those appraisers on the list are most of the ones that you're using. Keeping in mind, if you're dealing with anything in Kamloops area, there probably isn't any on there yet because that is a new area for us. So we are fully open in Kamloops now, which is great. But you can use any licensed appraisal or appraiser. So just keep that in mind if you're getting one. I know they're adding them, but I don't think they're added quite yet. They're just deciding who they are. So for now, we're just leaving it open for you to order those. So from there, how it works is we're gonna, in that email, you're gonna have basically a summation of the term, the fee, the rate, and when that sign back is required. So why that's important is because we want to know you are ready to move forward with that deal and your client is, good to move forward. Now, I'm not saying if something happens at the end and it doesn't move forward, it's just to basically get the next step started, which is once we have the sign back from you, then the document review person is allocated to you and introduced to you. So approval from the underwriter. Once we get the sign back, then the MO, we call them, or mortgage officer, is assigned to you specifically. And from there, they will take it to the funding. Now, that's not to say that in some cases, the underwriter may ask for some of those income documents up front. So just keep that in mind. That may flex, quite often not, but sometimes they do want to see that. So I'll jump right in. So I just wanted to touch base on those few things, but I think you'll be very happy in dealing with us when you do deal with us. So yeah, that's what I just wanted to touch base on our service. So we're going to talk about some business for self products for rental program, some imperfect credit, lack of credit, new immigrants. So keeping in mind, so with registered and non-registered businesses, now I don't know what head office likes to have the 6 months in there, but I just want to stress, we will look at 3 months business for self. So if they've only been business for self for 3 months, we will look at 3 months of bank statements, annualize that over 12 months, less any reasonable expenses. And I will go through those specifics further down. So when you see the 6 months, that is in reference to commissioned individuals. So we do require commissioned individuals, so your car salesman, anybody commissioned, that they have minimum 6 months job tenure. How we validate that income. So a couple of different things. Could be through bank statements, could be through a commission income letter, could be a contract. New immigrants and limited credit are considered. We do want them to be, they don't have to be landed, they can have PR. They've applied for PR. They may have a 9 SIN number still, we're okay with that. Here at Equitable, we do not have basically a minimum credit score. So if you have people under 500, we can still finance them, keeping in mind that our rates are determined on credit score. So if they are lower credit, chances are their loan to values will be scaled back on a purchase or a refinance. But I'll go through some of those again. But GDS and TDS, up to 48% on both. You can do a 30-year amortization as well. And this applies to both owner-occupied and rentals. Gifted town payments are accepted as well. Larger loans are accepted. So we do have certain lending areas. If anyone do any lending on the island, we opened up a lot of the upper island. We are in some of those smaller centers. I think I did send Pete out the lending areas. If not, reach back to me, because in there it'll tell you all of our lending areas. And then in there, it's also tiered based on those lending areas. So it may be, Kamloops is tier 1, Salmonar might be tier 3, or it may not be on there. So it does differentiate those in that lending area. The larger loans, meaning that we will do over you know, your $1 million, we may just scale back that loan to value, depending on the area. So registered business owners, for example, like your sole proprietor, your partnership or corporations, what would we require? So articles of incorporation proves the business or a business license or a GST number. A self-declared income letter will always be required, and that will be when you do a stated income type program. The underwriter will send that to you along with your approval. I will go through that letter further on down in the webinar. And then minimum 3 months bank statements for your business for self. Now, keep in mind, you can send us more than that if you like. If there's a better capture with the 6 months, that's completely fine, or 9 months, whatever it may be, but our minimum is 3 months. A non-registered business owner, for example, a daycare provider, 2 to 3 reference letters could be provided. Self-declared income letter will always be required, and then minimum of 3 months bank statements to possibly show those deposits from the parents that their children go to that daycare, for example. Commission sales, so like I talked about, realtors, financial planners, car salesmen. So job letter confirming the employment. So if they're a realtor, RE/MAX says yes, they're 100% commission. They've been here for at least 6 months. The self-declared income letter, which I mentioned, and then gross commission statement can be used, or minimum 6 months bank statements. Gratuity based, so that would be more heavy on the cash deposits. Job letter confirming the employment, self-declared income letter, minimum 3 months bank statements, and they always put additional documents may be required, just depending on what they're doing. If they're really large cash deposits, or even just any large deposits, because of AML, they may ask for a receipt or some kind of invoice or something to confirm those. I believe our minimum for that is $5,000 for deposits. So typically over that, they may require something more, but the underwriter will communicate that with you. Self-declared income letter looks like this. Some of you have probably seen these of different kinds at other lenders, but it's pretty self-explanatory. You just fill out the borrower's name and occupation, how long they've been self-employed. You're going to put in your gross revenue. So if we use, say, a truck driver, he makes, based on your bank statements, gross 100,000 with those deposits. And then you're going to put in any expenses. You have a conversation with your client and put in, let's say, automotive expenses. You'll put in there 40,000. Seems reasonable. So your net operating income you're going to use on the app would be 60,000. And keep in mind, the underwriter will also go with the underwriter, or even sometimes the MO sometimes can direct you on this if you're unsure of what to exactly put on there. So they're open to conversations about that. If you have any, you know, you're questioning, say, your deposits in the bank statement or something like that. So for our rental program, so keep in mind, with our rental program, our rates are bonused by 1 point for any rental purchase or refinance. So our best rate right now over 680, you're looking at 269, so it would be 369 for a rental. How we treat rental income. So on a standalone rental, it would be 80% rental offset on the property. And any other non-subject rentals. We do have a worksheet if there's a number of rentals, which works out to the 80% offset. If it's an owner-occupied purchase with a suite, we don't need it to be legal, just needs to have its own entrance and kitchen. We can use 100% add back. If it's not leased yet, you can add it to, you know, market rents to your appraisal. That's completely fine, or a lease agreement. The mortgages can be under company name, holdco if you like, with a personal guarantee. So I know that is unique for us. A lot of companies don't do that. So we do that both in rentals and owner-occupied purchases. Maximum up to a 4-plex with us, but we don't have a cap on the number of rental properties your client may have. So if they have 10 or 12, we can do it. We don't have a max on that. Imperfect credit. So as I said, we do look at beacon scores under 550, loan to value up to 70% on a purchase, 65% on a refi, referencing back that we will scale those lower credit scores. We can even look at using a reject beacon if they have no credit. We still will look at that. That will just be priced as our low amber. So if you look at our rate sheets, if you are getting them, if you're not, just let me know. We have all the ruby, diamond, pearl, amber, low amber. So if it is a reject beacon, we're going to look at the lowest pricing. So that would be your low amber pricing, but we can look at those. We do have an adjustable rate mortgage product. So you'll see on our rate sheets, they're not all on there. It's just too much to put on there. So if you're looking for some of the longer terms, you can just reach out to me. We do have 1, 2, and 3 years for that 680 beacon and higher. And then we do have a 1, 2, 3, and 5 year, and also a 3 and 5 year variable term on our next product. So just to give you an idea, our pricing on our 3-year ARM is prime plus 1.05. and then prime plus 1.10 for a 5 year. So keeping in mind, our penalties on the alt side are different than obviously our prime A side. So for example, on our adjustable rate product, we do require, there is an early payout, obviously penalty if they do pay it out. So in the first year, if they pay out in that first year, 5-month interest penalty. If it's a second year, it goes to a 4-month, and then 3rd to 5th year would be the regular 3-month interest penalty. IRD on our fixed rates is compared to our bond rate at the time. We actually do have a calculator online if they are looking at that. We have port options as well. So those are 90-day ports as well that are available to your clients. But if they're looking at paying out midterm, just keep that in mind. It is compared to the bond rate, so it can be higher priced in terms of an IRD. It's going to be the greater of IRD or 3 months interest. The edge with the fee or no fee. So if you wanted, say, to have a no fee option, so the client doesn't want to, you don't want to see a fee at all, the client, because our products have a 1-point fee for all of them. So that whether it's a rental or owner occupied purchase, refi, there's always a 1-point fee required on the mortgage. If the loan to value allows for it, you can add it to the mortgage amount. If not, it's basically becomes a closing costs. As I said, if you want to have a no fee option, you can simply bonus the rate by a point. That's how that works. Total worth program. So it's not one that gets a lot of interest, but this is really for someone. So there still is a requirement for employment here, business for self or employed. These are for your people that have a lot of liquid assets. And what do I mean by liquid assets? This would be investments or savings. It's not liquid in terms of properties that are free and clear. We want something that's liquid, which is cash or investments. So depending on the loan to value, we'll look up at to 65 GDS TDS on 75% loan to value. We'll go all the way up to 80% GDS TDS on 65 or less. It is for owner occupied properties. There's no rentals available on this one or second homes. Keep in mind, second homes are looked at as a rental property on the alternative side. We don't do them as a regular owner occupied. So just wanted to mention that when I saw the second home. Clients can own multiple properties aside from the subject property. What we're looking for a net worth. So it's a bit of a calculation, but minimum 75,000 in liquid assets. So depending on the loan to value, 25 up to 50% of the mortgage amount in liquid assets over and above the down payment amount. So they do have to have quite a bit of liquid assets to make this program work. Gifted down payment is not permitted as well. How we determine those, that liquid assets and also, so just liquid assets and down payment, we're going to look for obviously investment statements, a point in time, a Canadian investment statement from 30 days of the approval to confirm that, or day-to-day bank statements up to 3 months.
Lisa,
yes.
Can you go back to that last slide?
Sure.
I don't think I understand the net worth required.
Okay. So the lower the loan to value, the less liquid assets you have. So if it's 65%, you're going to require 25% of the mortgage amount in liquid assets. So do that math, 25%. If it's a $100,000 mortgage, 25,000 in liquid assets in over and above the down payment amount, right? Does that make sense now? Yes.
Yes. What's the 50%? That's above 65%?
Yes, if it's over that. Yes, correct. Yeah, there's the two. So trust me, it took me a while to wrap my head around it too. I have to use a calculator. I said there's some math involved in this one. So okay, so home equity line of credits. We do have the home equity line of credits. This is on the alternative side only. We can do them on rentals, or owner occupied, keep in mind they're pricey. So for example, if you're at a 720 Beacon, I'm looking up because I have my cheat sheet on my wall, by the way, prime plus 4.74. So it's almost like an unsecured, sort of, in a way. I'm not sure what unsecured look like these days, but they are higher priced, but they can work. They are interest only. There's no cost to have them there. So quite often, if you send a low loan to value or there's room in there to add one, the underwriter may just add one anyways for them. They can take it or not. You get paid on the full limit, not just the drawdown amount. So it has to be behind an Equitable Bank mortgage if it's the second, or obviously first would be first. But keep in mind, yeah, it can't go behind any other lender's mortgage. So up to 65% loan to value on the HELOC itself. There is a $500,000 limit, which will come on the next slide, but I jump around. Or you can do up to 80% loan to value combined with the first, with a fixed mortgage, with the credit limits of 200,000 being as a second. Owner occupied and rentals as well. They do get an Visa access card to access the line of credit. There's no annual fee, no fee to carry, zero balance. They get checks as well. So it is quite convenient to use if they like, and interest only payments. So standalone HELOC in first position up to 500,000, maximum 65% loan to value, both on owner occupied and rentals, interest only payments, and no annual fees. And then if you want a second, so where the second would come into play, or good ideas if they have a first mortgage with us already, but they want to access some equity. So rather than paying out the first mortgage and having penalties, you could just add a second behind it up to 80%. As I said, no annual fees, owner occupied and rental, and interest only payments. Just to give you some baseline finder's fees, depending on the volume and so on, that could flex, but 1 year 50 basis points, 2 year 60 basis points, 3 year 90 basis points, and then it goes up from there. HELOC, you're paid on the full credit limit, so 50 basis points on the credit limit, not the initial drawdown amount. Some of the lending areas that we did change, so up to 80% loan to value. So this is a major center. So Vancouver, Kelowna is up to $1 million. I think Kamloops as well. Vernon is a little bit scaled less, but we're still going to, I think, get to 850. Yeah, 850. But so we go up to 1.5, 80% in the major centers only. And then of course the tiers are there from there. As I said, if you guys need that or anybody needs it, I can certainly send it along. If I thought I sent it to Deb, but I'm not sure. And then of course, so the other thing I want to talk about is how we do appraisals. So I mentioned that you can order your own appraisal if it's required. So anything on the alt side will always require an appraisal one way or another. What we did introduce was a new valuation process with FCT. So basically what will happen is we will automatically put your deal through that initially. It's a $375 fee. We will automatically know if it's approved or it jumps back saying it's not, we don't like the value. When your approval comes, you will know either please order appraisal or one isn't required. So this will automatically go through that. And then if it doesn't auto-evaluate, then the underwriter will communicate that and attach the approved appraiser list. And the $375 fee is collected at the lawyer's office. If for any reason that deal did collapse in that time frame, there's no fee passed along to you or the client. So that's a good thing. You're not on the hook for an appraisal fee. So that sort of brings me to the end. As I said, with us, we got a lot of industry knowledge, common sense lending on documentation as well. I see a lot of different scenarios. So as I said, you may not cover them all in this webinar, but it should give you an idea that we're not that, get your mind out of the 2-year average, NOAs required, T1 generals required. We're not that type, we're not doing that type of lending, although we can do that. If that's what you want to use a 2-year average, you can do that, but we don't condition for an NOA. And we don't, if for some reason there is some outstanding taxes, we don't need those paid. We don't condition for that. But typically, if you're not sending us an NOA, we're not going to know anyways. But if you do send us one, we can pay them out if you want, but we don't require that. So if you do have some outstanding taxes for CRA, we don't look for that. And as I said, we're not looking for that, 2 years business for self, 2-year average, unless you're trying to get that onto the prime side. So alternative side, we don't need that. Minimum 3 months business for self, 6 months, 4-year commissioned individuals. We are a broker channel, so we don't have storefront. So you access through Equitable Bank through the broker channel. And that leads me to the end of the webinar. So I think I touched base on everything. Does anybody have any questions that they would like to ask?
I do.
Oh, go ahead, Kathy.
What is your lending area? I'm in Salmon Arm.
Well, let me just look here. I don't actually know that we're in Salmon Arm, to be honest with you. I don't think we are. We're Vernon, Coldstream, Peachland, Summerland, Penticton.
I did
That
send this out
doesn't
to everyone too.
surprise me.
No, it doesn't. I know it doesn't. Sorry, what was that? Did anyone else?
I said I sent it out. I sent out the
Oh, you did?
tiers and
Okay.
everything, so it should be in your email inbox.
Okay. There you go. Yeah, Salmon Arm, unfortunately, is not on that.
Anytime soon, or do you know?
They just added Kamloops, if that gives you.
That's why I thought, okay, it's not going to be Salmon Arm if they just added Kamloops.
I know, I was shocked actually that they didn't have it sooner, but in any event, it's there. So I'm very happy to, okay, thanks, Chris. Bye. Anybody
Another
else?
question for you, Lisa. So if someone has never submitted to Equitable, what's the best practice in terms of putting the deal together? So do a submission, wait for a conditions list, or docs up front? Like I know
no docs up
lending is a little different.
Nope. So what that looks like is, you can phone me to talk through the deal, how to basically what it looks like. That's completely fine. You'll submit your deal. Deb will be the main submission agent. Deb White, main submission agent. And then them as the agent. If for some reason they don't do that, we typically can pick it up and we fix it anyways, but just keep that in mind. Deb is the submission agent. And then the system will announce that they've got the deal and allocate it to an underwriter. The underwriter will ask for, if it's a purchase, obviously they'll ask for the MLS and the purchase agreement. So that's the first step. And then if they do require anything else based on the deal or some of the notes, they will reach out to you. But we don't need documents up front unless otherwise asked for by the underwriter. So keep in mind, once anything asked for will be asked for from the underwriter. If they don't ask, then you'll be sending it to the MO, which is the mortgage officer. And she'll walk you through all that stuff. And you get a checklist too, and so on. Is that clear? And she'll take you to funding. And we use FCT to close, just so you know. Yeah. Anyone else? No.
Lisa, what's your maximum mortgage amount? Is it 1.5?
We don't have a maximum. It's just scaled. There is no maximum. It's just scaled. Keep in mind, if we're looking at $4 or $5 million properties, we'll usually run them by Ian, who's our credit manager, and so on the alt side, just to see if we're interested in that property and it's not anything funky. But we don't have a cap actually. So
another question, if it's a gifted down payment, does it have to come from a close family member?
It has to be a close family member. It has to make sense. It can't be a friend. It could be stepsister, things like that. Yes.
Common law?
Yes, absolutely. Yep, no problem with that at all.
Well, that isn't going on the mortgage.
That's fine.
Okay.
Yeah, that's fine. Yeah, we're pretty makes sense. Pretty makes sense. As I said, I asked, how about a friend? No, that doesn't make sense. But anyways, anything else? Yeah.
I don't know if you covered this or not. Will you pay CRA?
Yeah. Yeah. We don't do any ALR. I shouldn't say we don't. Typically, we don't. If there's any farm status, as you probably will know, with most alternative lenders, we're not looking for those type of properties. But if it's been like grandfathered, or sometimes even in the Lower Mainland, you can have ALR. We can consider them. If they're over an acre, typically we scale to 65, unless it makes sense for us and it's just a larger property, but it's in a major residential center. So if you do have those type, you can always just send them to me and I can run them through Ian. He's the one that says yay or nay. So we will look at former grow-ups as well. We will look at bankrupts. They just have to be discharged. It doesn't matter how long. They don't have to have even reestablished credit, because of course credit is just looked at. We base our pricing on our credit score. We do bonus the rate by a 1/4 point on consumer proposals or bankruptcies. Just keep that in mind. So even if at the 700 score, they can get best rates plus a 1/4 point. For bankrupts or consumer proposals. But the consumer proposals, we will have to pay out. We don't let those keep going. So those would have to be paid out, but no leased land, no modular or mobile homes. I always just say that because people still ask these days, but I think
Do 2 negatives make a positive? What if you have a mobile on leased land? That's better, right?
it's much yeah. We wish. Yeah, I think that's it. Yeah, I think that's pretty much
In a fire zone?
What?
In a fire zone? All that in a fire zone? No?
Oh Jesus, a fire zone. Yeah, that must be
How's that
difficult.
affected you guys?
Have you guys found that you got any issues with that right now? Getting insurance? I know there are insurers out there doing the higher price stuff, but
It seems like there's always one.
there is always one, right? Other than that, that's really it. What I would suggest, if you've never dealt with us and always getting comfortable using a new lender, that just reach out to me when you have questions. It doesn't matter what it is, just reach out, or if you need to have help figuring out a deal or how we're going to deal with that income and so on. But yeah, by all means. Oh, and then of course, just also to touch base on this, because I know people ask this. So if you do place it with Equitable Bank on the alternative side and you do renew, you do get paid on your renewals, depending on what term, like a 1 and 2 years, 20 basis points, 3 and 4 years, 30, and then 5 years, 45 basis points. So you do get paid on your renewals if you do renew them. If you want to kind of do this, I'm going to place them in a 1 year and then hopefully switch them to the A side. We can look at switching them to the A side at that time, but keeping in mind, we only do insured and insurable deals. So that would mean they'd have to be 25 years and under. So a lot of times if people are just taking a 1 year, 2 year term and they're using the full 30 year, they don't qualify for the switch over to the A side because it has to be insurer guidelines for that. So just keep that in mind.
Lisa, I have another question.
Sure.
Non-taxable income such as living out allowance or truck allowance, it's non-taxable. Do you count that as income?
You can use it. Yep. You can use it as income. Yep. On our alternative side. Yes. Not on the A side, but yes, on alternative. Yep. If it's there, we can confirm that it's there. Would it be part of the job letter then? Is that what you would do?
Yeah, it's on the job letter and it's on the pay stub.
Perfect. Yes, absolutely.
What about any CERB income that someone might have had last year or potentially this year? Just
Can't
take
use
it.
It can be there. We can see it. That doesn't matter because we know it's there, but we can't use it as income per se. They have to be off CERB too. Yeah.
Would you use a 3-year average then of T?
Possibly. They can on exception. They don't typically do it, but we can look at it. It is a possibility. So I won't say no because I've had people do that before. Anything else? Well,
Looks pretty good.
okay, that looks good.
All right, so I gave you guys all the email. Lisa's contact info is actually on that email. So if you need to get a hold of her, you can reach out through email. Otherwise, I will have this call recorded, put it on our YouTube. So if you guys need anything there, that's great. Is there a portal at all, Lisa?
No, there is a website that you can go to, and the website, the password is welcome. So if you want to go in there and look around, There's not a portal per se to upload docs or anything. Nope, that happens with the mortgage officer.
Okay.
But there is a website that you guys can navigate around. As I said, there's a penalty calculator. There's also the reverse mortgage information if you do some of those as well. So yeah.
And is that the website? Is it? Let me just
Equitable
look.
Bank,
Is it eqbank.ca?
Yeah.
Okay.
the .ca. Yeah.
Super. Oh yeah, there's a link to it in that email as well.
There you go.
Awesome. Well, thank you, Lisa.
Oh,
I
Bobby,
appreciate you
you're welcome.
spending the time to
Yeah.
give us some info, and
Yeah.
yeah, we will
Okay,
send
awesome.
any deals we can your way.
Thanks, Pete. Okay, thanks, everybody.
Awesome. Thanks, guys. Again, we'll be back Thursday for another one of these meetings. Not again, this is not full broker meeting, but another lender. But thanks, Lisa, and we'll see you
Okay,
guys
thanks
Thursday.
so much. Have a great day, you guys. Bye-bye.
Bye-bye.
Bye.